Hi, my name is Tristan Jacob Lujan, and this is my gang Colby Encinas and Jared Hindren. And we will be explaining Chapter 7 of Allocating Cost of Support Departments. So, before we go more in depth, I want to give you a little overview of cost allocation and common costs. So, cost allocation is the process of identifying and assigning costs to activities, people, projects, or any other cost subjects. The cost allocation system is a process for assigning costs to the different businesses, departments, or products that them benefit from those costs. So the main goal is to spread costly fairly across departments to calculate profitability and derive transfers prices. Essentially, it works to measure financial performance and improve decision making. Does anybody know what common cost is? Well, I'm here to tell you if you don't. Common cost is the cost of a resource used in an output of two or more services or products. These common costs may pertain to period of time, individual responsibilities, sale territories, and classes of customers. So the first step in cost allocation is to determine what the cost objectives are. Usually they are departments, and they are categorized in two departments: producing departments and supporting departments. So, producing department is a unit within an organization responsible for producing the products or services that are sold to customers. So, for an example, in a large public accounting firm, um, the producing departments are auditing, tax, management advisory services, such as like computer system services. So in a manufacturing setting, such as like a Volkswagen, producing departments are those that work directly on the products being manufactured. For example, the assembly and the painting. Next, I want to talk to you guys about the supporting department. Supporting department is a unit within an organization that provides essential support for services for producing departments. These departments are indirectly connected with an organization's services or products. So, as the example of Volkswagen, those departments might include engineering, maintenance, personnel, and building and grounds. So, once the producing and supporting departments have been identified, the overhead cost traceable to each department can be determined. So, looking at this example, this shows you how manufacturing firms and service firms can be divided into producing and supportive departments. So, looking at the manufacturing plant, which makes furniture, may be departmentalized into two producing departments. You can see the assembly and finishing, and you can see the categories underneath it. And the four support departments are material, storeroom, cafeteria, maintenance, and general factory. And now looking at the service firm, a bank might be departmentalized into three producing departments: the auto loans, commercial lending, and personal banking. And then there's three support departments: the drive-through, data processing, and bank administration. Overhead costs are traced to each department, and you need to know that each factory or service company overhead costs must be assigned to one and only one department. So once the company is departmentalized and all overhead costs are traced to the individual departments, support departments costs are assigned to producing departments, and the overhead rates are developed to cost products. Next is Jared Hindren.
Thanks, Tristan. What to do? My name's Jared. I'm going to move into intra-company allocations, or moving costs from a department within a business to another. So let's start with an example. Let's say you work in the auditing department for a corporation. You do auditing things. So let's say your position requires photocopies to be made fairly frequently. Your employer has a photocopying department specifically made to take care of that for you, so you can continue doing auditing things and not photocopying things. Awesome. So that is the support department, like what Tristan referred to earlier. But for budgeting purposes, the corporation needs to know the costs your department is using in order to have these services done. This is done through the use of a charging rate. Now, there are two major factors that go into determining an appropriate charging rate, and that is the choice of a single or dual charging rate and the use of budgeted versus actual support department costs. And we will get into this right now. I want to change slides. Oh, there we go. Okay, so single charge rate is like it sounds, only using one rate. It's the simplest to apply. You basically put all of the costs in the numerator and some measure of usage in the denominator. So in the slide, we have an example of a photocopying support department. Fixed costs are $26,190 a year. Variable is 2.3 cents per use. And then you can see the budgeted usage of 270,000 total pages and the actual usage of 272,000. So to find your charging rate, you add up all the fixed and variable costs as you can see here. And then you divide by the budgeted usage, which would come out to 12 cents per page. Then you multiply that rate by the actual usage for each department. And the snippet shows this being done for all departments so that you can see how much cost needs to be allocated to each department. Okay, moving on. So now for the dual charging rate. Think of it as a single charging rate, but different. And it is different because instead of grouping the fixed and variable costs, it treats them separately. That basically means more work for us. So we're going to use the same example as the last slide. So the variable rate we already know, which is 2.3 cents per page. But we need to develop a fixed rate in order to separate them because we currently only have total fixed costs. So for this problem, we are basing the fixed rate on budgeted monthly peak usage for each department, which is given. We divide that number by the total across all departments to get a percentage rate to apply to each department. We can then multiply it by the budgeted fixed costs that we had before to get the allocated fixed cost for each department. Then, finally, we can use the two rates we have for each department to assign costs, which is what you see in this final snippet here. You multiply the variable rate by the actual usage for the year to get your variable amount. Then you add that to the allocated fixed cost we found in the previous step to find your total charge for the department. So this method is a lot of extra work. So why do we even do it? Well, I'm gonna answer that for you. You can go back in this video to the previous slide and you can see that the allocated costs are very different in this scenario. And that is because the fixed costs make up the greater amount of the cost for photocopying than the variable costs. You can also see in the second snippet here that the tax department has an unusually high peak number of copies. So if we were to use a single charging rate in this specific scenario, then the tax department would end up going over their budget in the future because not enough of their costs were allocated to them in previous years. And the same goes likewise for the other companies. They would never really reach budget usage, and that money would be better budgeted elsewhere. Okay, so perhaps you noticed we used budgeted amounts previously and not actual amounts. This is actually how it is typically done, and this is for two reasons. First, using budgeted data is sometimes the only option. The overhead rate is calculated at the beginning of the period, which of course we don't have the actual cost before any actual events have taken place in the beginning of the period. And secondly, in staying true with one of the purposes of budgeting in the first place, doing so allows performance evaluation of both the support departments and the producing departments to take place. When allocating funds between two departments, it is imperative to use budgeted usage anyways. This is because actual usage includes inefficiencies and errors of the support department, and those costs should not be passed to the producing department, but should instead be addressed and fixed. The only time when it would seem beneficial to use actual usage would be for performance evaluation at the end of the year, where you can compare the year's actual costs allocated to each department with the budgeted costs. All right, that's it for me. Next up is Colby.
Good afternoon, class. My name is Colby. Be going over support department costs of allocation methods. So when companies are determining which support department costs allocation method to use. They must determine the extent of the support department and its interactions, as well as weigh out the costs and benefits associated with the three methods, which is direct method, the sequential method, and the reciprocal method. So first, it's the direct method, which allocates service department costs directly to producing departments and ignores any interaction that may exist among service departments. So this is the simplest and most straightforward way to allocate support department costs. Some examples of this would be salaries paid to employees, cash paid to vendors and suppliers, cash collected from customers, as well as interest income from dividends received. Moving on to the sequential method, which just allocates service department costs to user departments in a sequence. So this gives a little bit of a partial consideration to interactions among service departments. And it is performed in a step-down fashion using a predetermined ranking procedure. This procedure ranks the support departments in order of the percentage of service provided to other support departments, or ranks the support departments in order of their total cost from highest cost to normally the lowest cost. Moving on into the reciprocal method, which is the most accurate and comprehensive of the service department cost allocation methods, but is also the most complex. The basic premise is to account for the interaction between service departments and not simply ignore the services they provide. So again, in the reciprocal method, it gives full consideration to interactions among other service departments. So now that I've gone over the three steps, we're going to go into some comparisons. So first is the sequential and direct. The sequential method provides more information than the direct method, which allocates service costs only to production departments. In other words, direct method ignores the service provided to other service departments. For example, a company assumes that the lunchroom doesn't use janitors and that the janitors do not eat in the lunchroom. So the direct method, which is less precise, is the quickest to calculate and requires no information regarding service departments. However, under the direct method, service departments have no incentives to minimize their utilization of other service departments. So as I stated earlier, direct has little to no interactions and ignores all the interactions. Sequential somewhat deals with the interactions. And lastly, sequential versus reciprocal. The reciprocal method is complicated because it attempts to allocate all service costs to all departments regardless of sequence. So for example, some costs of the janitorial department are allocated to the lunchroom, and some lunchroom costs are allocated to the janitorial department. The method of solution requires a lot of equations and the collection of additional service cost data to complete the data equations. Unlike the sequential method, the order of assignment in the reciprocal method makes no difference to the final results. Thank you guys for watching our video. Have a good day.